Mr. President.
The senator from Kansas.
I ask the quorum call be lifted.
Without objection.
Mr. President, I ask to be recognized to address the Senate. Mr. President, thank you very much for the opportunity to be here this morning. We've had a lot of news in Washington, D.C. and across the country over the last few days. Decision from the Supreme Court regarding immigration laws in Arizona. We're anticipating a decision by the Supreme Court later this week in regard to the Affordable Care Act. Front and center are issues that are important to the country. We were successful last week in approving here on the Senate floor a so-called farm bill, an agricultural bill, again, that has an impact upon many in our nation. I want to make certain that we don't lose sight of what remains, in my view, that should be front and center. And all the things that people ask government to do and all the things they want to accomplish in their own lives can only occur if there is a good and growing economy in the United States. And so while I certainly wouldn't call any of the other issues that we're addressing here a distraction, they're all important, I want to make certain that my colleagues understand that we have to come together to make certain that Americans, individuals across our country, can access a job, can feel secure in the job they already have, and can have the sense that they have a future where they are employed, or that if there's a need for a change in job, that opportunity exists. Job creation is something that the federal government can't do in and of itself, but the decisions we make here very much affect whether or not the private sector can have the level of confidence in the general economy, a regulatory environment, a tax code that is conducive toward the private sector creating jobs in the United States economy. And this matters certainly from my point of view as a member of the United States Senate, in that with job growth, with a growing economy, we are better able to pay down our national debt. In my view, if we're going to get what I consider the most serious circumstance that our country faces today, the deficit and the debt, if we're going to get it under control, I don't foresee how that happens without a good growing economy putting Americans to work. And of course, from the individual's point of view, it's important. It's a component of our lives, something that's important to us, that we figure out how we earn a living, put food on our family's table, save for our kids' education, save for our own retirement. And so while the issues that are being addressed here in the Senate and across the country and across the street at the United States Supreme Court matter so much, we cannot lose sight of the fact that we've got to create an environment where jobs are front and center. And of course, we know the economic statistics today. The unemployment rate, 8.2%, has been above 8% now for a long time. The presiding officer this morning here in the Senate and I have introduced legislation that the primary function of which is to create an entrepreneurial environment that startup companies can grow and prosper and in the process put people to work. It is about growth that I think that we need to continue to focus on. And I very much appreciate the opportunity of working in a manner with the senator from Delaware, Senator Coons, and others to see that we do that. The topic I want to specifically address this morning, and I was reading the Wall Street Journal last week, and this article caught my attention. I'm of the view that for economic growth to occur, and especially to occur in the communities across Kansas, the state I represent, we're going to have strong and viable community banks. And there's a regulatory environment that makes that much more difficult. And the article that the Wall Street Journal included in that I want to speak about, at least briefly this morning, is the headline is "Small Banks Put Up for Sale Sign." And the content of the article is very much about how small banks are now selling to other banks. And the primary reason this article focuses on, the reason that that's happening, a growing number of tiny community banks are deciding it's time to put up the for sale sign. Many executives of these small lenders are frustrated by costly new regulations. Talks about a bank in Iowa, in Ohio, in Texas. Talks about a number of banks in which the bank, the individuals who own the bank never had an intention of selling. This was their livelihood. This is what they expected to pass on to the next generation, to the next set of stockholders. But because of the regulatory environment, the article quotes these bankers as talking about how it's no longer any fun. A 66-year-old CEO is quoted as saying, quote, "I don't run a bank anymore. I run around trying to react to regulations, and frankly, that's no fun." And so why this is important, it's certainly important for the people who own and run a bank, but it matters in communities across my state that there is access to a local lender, to a relatively small financial institution that knows its customers, that the farmer, the rancher, the small business person has the opportunity to develop a personal relationship with the individual that they're borrowing money from. And I know from my own circumstances of growing up and living in rural Kansas that the likelihood of being able to get a loan from the community bank, the banker that you know, who knows you and knows your ability, your credit worthiness, your trustworthiness, that's a pretty special relationship that we've got to be very careful we do not lose. If you're trying to borrow money from somebody you don't know, it's a different circumstance. And so I want to highlight once again this regulatory environment, not just for banks, but for all businesses in which the decisions are being made. We're not expanding. In this case, we're selling. And the reality is that has consequences to every American, to every American family. Job creation is going to be improved whenever we have a regulatory environment that encourages economic growth, not discourages it, and a regulatory environment that is certain. So much, particularly in the financial services industry with banks and other financial lenders, the uncertainty that exists in large part because of the passage of Dodd-Frank and now its implementation, the uncertainty of whether or not more regulations are coming and what those regulations are going to say and do, they certainly can drive up the cost. We certainly want to protect consumers, and we operate in many instances in a regulated environment, but these regulations need common sense and need to take into account the specific circumstances, particularly of a small bank. My small banks in Kansas had virtually nothing to do with the financial debacle of 2008, and yet they're burdened with the responsibility of complying with a huge new set of regulations that resulted from the efforts to address the financial crisis of 2008. In fact, this article again points out that the board meeting at this small bank, the binder of information delivered to the bank's board before the last monthly meeting included 419 pages of information to be reviewed. Banks more and more are having to put people on the payroll to try to compliance officers, as compared to those kind of circumstances in which the bank is making loans. So the cost of doing business, the cost of credit increases, and the access to credit is diminished, again, diminishing the chances for job creation. One of those items under Dodd-Frank was the creation of the Consumer Financial Protection Bureau. This hit me while I was visiting one of my banks at home in Kansas. They told me the CFPB had called and said they were sending, I think the number was 12 examiners and 2 lawyers to come spend more than a month in this small bank examining the bank. Again, these are banks that had little to do with the financial collapse of 2008. Almost without exception, our community banks, certainly in Kansas, they didn't make loans to people who were unlikely to repay those loans. They didn't make loans to people who had no ability to repay those loans. And they didn't make loans without getting proper documentation and seeking the necessary credit worthiness of that borrower before making that decision. And yet the burden of these regulations falls directly upon them. And while I guess I'm speaking in support of trying to change this for the benefit of the bankers, who this really is to benefit, if we were to change the regulatory environment, who this would make a difference for is the person who wants to borrow money, who wants to buy an automobile, who wants to buy a home, who wants to buy a piece of commercial property, and yet they go to the banks in communities across Kansas and are told, because of the new regulatory environment, this is a loan that we cannot make. And the Consumer Protection Financial Bureau, which has 12 examiners and 2 lawyers, soon to visit a small bank in Kansas and intends to be there for more than a month. The regulations that the Consumer Financial Protection Bureau, they haven't even created their regulations yet. So they're out auditing a bank before the regulations are in place. And the My reaction when the banker told me this was, well, I need to go back to Washington, D.C. and see if I can do something. And I was thinking through the appropriation process. I happen to be the ranking Republican on the Appropriations Subcommittee for Financial Institutions, Financial Services. And I thought, well, we need to rein in the CFPB through the appropriations process to get them kind of within their sphere of where they belong in a much more common sense, less intrusive way. And it occurred to me, the light bulb went off, is I don't have that ability. I can be a member of the Appropriations Committee, I can be a member of the United States Senate, I can actually be the lead Republican on the subcommittee that's responsible for financial services, but because the way the CFPB was created, its money is an automatic draft from the Federal Reserve. And so we as members of the Senate and Congress in general have no input into the level of funding of an agency that is going to have dramatic effect upon the financial institutions of this country and therefore the individuals, the consumers that those financial institutions serve. In addition to that, there is only one person who administrates the program, who is the administrator of the Consumer Financial Protection Bureau. Unlike the CFTC, unlike the SEC, where there is a commission or a board in which there's a collective decision made, there is only an administrator. I've introduced legislation. We've had this conversation on the Senate floor before, and I would encourage my colleagues to look at that legislation that would reformulate the way that the CFPB is managed and directed, and would once again give Congress the opportunity to have input into how the CFPB functions. I would never try to explain to Americans or to Kansans how great Congress does its job, but I do know that our ability, the fact that we're subject to election, the will of the people of America every 2 years, gives us the opportunity to have the people's input into the administration, into the regulatory process that is so burdensome now upon in so many businesses, including our financial institutions. So my effort here today is to highlight once again that what we do in Washington, D.C., and in this case particularly what the administration does, what the Obama administration does today and what administrations have done in the past in regard to regulations, very much has a consequence upon whether or not Americans are going to live in a country with a growing economy, in which there is a sense of security and people know what to expect, or whether they are going to live in a country in which a business owner, a small businessman or woman in Kansas or across the country is holding back from hiring employees because they don't know what next is going to come from their own government in regard to regulations that are costly, drive up the cost of being in business, and reduces the chances that we have expansion of our economy, which means reduces the chances that Americans can have good, solid employment opportunities. Have two daughters graduating from college, one a couple years ago and one this year. The job market certainly is important to me as a parent. The ability for a young American to find a job and to pursue that job, to be able to afford to pay back the cost of an education is something that we need to seriously take into account. And while we are going to have, I assume, a conversation again here in the Senate this week on the cost of borrowing money for students and student loan interest rates, we ought not forget that the most important thing that we can do to help our students once they graduate is to make sure that the economy is such that employment opportunities are available. It doesn't matter what the interest rate is if you can't find a job. And we need to make certain that we do fulfill our responsibilities to the American people to see that the economy, job creation is front and center for the benefit of every American and for the benefit of our country's deficit that is it's so important that we create a growing economy. And I again would highlight how important it is for us to get the regulations under control and particularly criticize the circumstance in which legislation that does not pass Congress somehow takes effect because the executive branch concludes that they can do what we refuse to do by executive order or by rule and regulation. It's time for Congress to reassert its role, and it's time to make certain that in pursuing that role, we create an environment in which jobs are front and center, and the American people can all pursue the American dream. Mr. President, thank you for the opportunity to address the Senate today, and I yield the floor.